And a lot of the people building this system are people that are debt barons, essentially. I mean, BlackRock in particular had a really big role to play in the whole COVID monetary situation. At the same 2019 Jackson Hole meeting where Mark Carney talked about, the new financial system to come, is when BlackRock presented their going direct paper, which was the policy that was followed essentially and exactly when COVID hit, just a few months later. And BlackRock utilizes debt to, increase its profitability and power and ownership of things around the world. And honestly, since debt's been such a big part of the control system for a long time, it's, the people that can control the most debt on Wall Street and stuff tend to be the most powerful and the most successful, right?
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In today's video, Whitney Webb discusses digital debt, digital finance, and the global finance and governance system being forged before our eyes.
Well, it seems like in Larry Fink's case in particular, there's a goal, a big ambition there to develop new asset classes that can be used to basically fuel their existing business model and perpetuate it for, millennia forward. So one of these that I've been writing about for a few years is the whole idea of natural assets, what they call nature's economy. And one of the groups that has been sort of propelling this forward, at least one of the earlier groups, the Intrinsic Exchange Group, which is a product of the Rockefeller Foundation and the multilateral development banking system, has a graphic on their website called The Opportunity, and they show there the existing amount of assets in the world economy, and then show what it, if we unlock natural assets, how nature's economy, it's like 6 times the amount of existing assets in the economy today. And so as an asset manager, BlackRock being able to unlock and take control of as many natural assets as possible that aren't currently part of the financial system is obviously a way for them to perpetuate what they do and deepen and expand their control over not just people in the existing financial system, but really over the natural world as well, and essentially turn everything alive into a tradable Wall Street financial product. And the goal, as FINK has stated, is to have all of this on a universal ledger, on blockchain, presumably, and have it be, trackable and surveillable, which is interesting if you look at it through the context of risk management, which is something that Larry Fink is very open as having been one of the guiding lights of his whole career. And so by having it all surveillable and automated in a sense, he's able to have his risk management AI thing, Aladdin, sort of exercise control over it in unprecedented ways, I think. For their benefit. And then, of course, a lot of what's happening now as we're moving into this new financial governance system is the push to change all of the infrastructure towards this, quote unquote, green model, I guess, or decarbonization, right? Which is, of course, interface with the global carbon market, but not necessarily so. It doesn't have to be. But the push is obviously to create a bunch of new infrastructure all over the world. And BlackRock is positioning themselves to be one of the key players in that space. They acquired, I think they're called GIP, one of the biggest infrastructure, developers in the world. And I think one of their top guys at Davos just a few months ago was talking about how they're betting really big on infrastructure going forward. And it's going to be one of the biggest investment opportunities of the next several decades, actually. So I think they're quite ambitious. And, if people aren't aware of this, I'm sure they'll get away with it, but we'll see.
The price of the largest Donald Trump memecoin, MAGA, TrueUMP, surged more than 30% following an assassination attempt on the former United States president while he was speaking on stage at a rally in Butler, Pennsylvania. The Ethereum-based MAGA memecoin spiked rapidly from a price of $6.31 to $10.36 immediately after the assassination attempt, seeing its total market capitalization jump from $293 million to $469 million in less than 45 minutes, according to Deck Screener data. The price of several other Trump-themed memecoins also rallied on the news. Solana-based memecoin Trump, TREMP, jumped more than 63% in the hour following the news, while another memecoin dubbed MAGA, briefly spiked 21% within the same time frame. Trump was speaking on stage at a July 13 rally in Butler, Pennsylvania, when several shots were fired from an unknown direction. Trump clutched his ear as the shots sounded, dropping to the ground as U.S. Secret Service agents rushed to protect him. While being whisked off the stage by his security detail, Trump asked them to pause while he raised his fist and shouted toward the crowd. An official spokesperson from Trump's campaign told the Associated Press that the former president was fine following the incident and was undergoing medical treatment at a local facility. President Trump thanks law enforcement and first responders for their quick action during this heinous act. Spokesman Stephen Chung said in a statement, "He is fine and is being checked out at a local medical facility." More details will follow. Meanwhile, President Joe Biden's predicted odds of winning re-election fell from 30% to 15%. Trump now stands as the clear favorite on the prediction market, with overall odds of 70% compared to just 15% for Biden and 9% for Vice President Kamala Harris. Trump, formerly a skeptic of cryptocurrencies, said on several occasions that Bitcoin was like a scam. However, he has changed his tune on Bitcoin and other digital assets in recent months.
Well, I would say in this context, I think the digital ID is a key enabler of the surveillance, knowing what everyone is doing at the transactional level and being able to tweak that micromanagement based on a person's activity, because the digital ID isn't just limited to the financial system, right? It's like your travel, your health history, your career history, your education credentials, your access to telecommunications, social media, the internet. With the new AI era, right, they can fuse all that data, analyze it, and depending on how they develop that AI algorithm, use it to control people really in unprecedented ways. Well, I think the digital ID and the CBDC and its private sector equivalence project is something that we're always sort of intended to be the same system. So there's documents from the UN, from the BIS, and in related groups that are sort of that have been working on this for years. That essentially frame one as essential to the other, using words about, this is inclusionary, the whole, marketing behind digital ID is that everyone needs legal ID because otherwise they're unable to access essential services, right? Mm-hmm. And so the idea is we all have to be included in the system, and they directly link that to the concept of financial inclusion and banking the unbanked, which you brought up earlier. But inherently, these systems actually function in an exclusionary way based on how they've been set up. They have essentially said that this is the only way, this will be the only way to prove you have legal identity. And so if you don't participate in that system as far as the state or the private sector is concerned, you don't exist. So by not participating in that system, you're inherently excluded from the economic system and really essentially everything. So you have to onboard to the surveillance state or be excluded from everything. So it's, being marketed as inclusion, but it's really inherently exclusionary.
On July 12, the X social network was aflame with multiple on-chain data outlets and independent analysts announcing that the German government's Bitcoin wallets now have a zero balance. A portion of this group is suggesting that Bitcoin BTC price will go on an upward tear now that this assumed sell pressure has been removed from the market. Despite the news, Bitcoin price remains constrained within a tight range, where $60,000 serves as resistance and $54,000 as support. Let's take a look at some of the technical factors behind Bitcoin's recent price action. Bitcoin's breakdown from $60,000 confirmed the M-top, or double top, and a pattern of bear flag continuation has set in. Note how the downtrend accelerates alongside increasing sell volume, and attempted breakouts to the upside are capped by weak buy volume. Ideally, traders would want to see this pattern broken by a strong high-volume push above the $60,000 level where the 61.8% Fibonacci retracement level resides, and then a few daily candle closes above $60,000 to establish support at or above this level. While market participants' expectation that Bitcoin price can pull off a trend reversal now that the German government has finished its BTC selling is likely to be the new narrative in crypto media. The looming threat of some portion of the 140,000 Bitcoin being returned to BlackRock's clients selling off their recent redemptions could be the next sell pressure event that pins price within its current range or even sends it to the M-top target at $44,000. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.